Tesla reported third quarter earnings on Wednesday, October 19, and the stock price fell as much as 7% on the day following the announcement. So let's dig through the earnings conference call and let's take a deep dive into what was said to determine what had investors pessimistic about Tesla stock. So let's get right into it with Elon Musk, the techno king of Tesla and also the CEO of Tesla. Elon Musk opens by saying we had our industry leading operating margin reach 17% and our free cash flow surpassed 3 billion in the third quarter, approaching 9 billion in the past 12 months. As our factories ramp up, we're looking forward to a record breaking fourth quarter. So excellent start off, and not the way you would expect a conference call to jump off if you knew that the stock price had fallen 7%. You'd expect to see some bad news in the opening remarks of a conference call. This was not the case for Tesla and Elon Musk here. And I have to say the company has done an excellent job ramping up production, expanding output, and at the same time increasing profit margins over the years. The execution on this has been great. The company has now reached a level where operating profit margins are in the mid-teens and growing, and free cash flow is 9 billion in the last 12 months, approaching a 10 billion and above annual production cycle. So excellent um, performance and execution here. Moving on, Elon Musk talks about production of the 4680 cells tripled in the third quarter compared to the previous quarter. So quarter over quarter tripling of these 4680 cells, which are battery cells that go into its vehicles, which are critical to ramping up its production and decreasing the cost per vehicle here. So great news so far for investors of Tesla stock. Moving on, Elon Musk discusses that in this quarter they expect a wide release of full self-driving beta in North America. This means it's cars that are equipped with the software, the FSD, full self-driving software, will be able to essentially drive themselves in North America. And that's a significant milestone in achieving the end goal of just having these cars be totally self-driving, where you won't even need a steering wheel, gas pedals inside of these cars. And at that point, Tesla can operate a whole fleet of driverless cars, robo-taxis, and all of that, which can be incredibly profitable. Interestingly, the safety that they're seeing in the full self-driving mode is significantly greater than the safety they're seeing when it's not. So in essence, in other words, that the car's self-driving mode is safer than when humans are driving the car. The car in its self-driving mode is safer than when a human is driving the car, and that says a lot because the software is going to drive at its optimum level at nearly all times, whereas when humans are driving, we're not at our optimum level at all times, right? We could be sleepy, we could be tired. Hopefully most of you are not doing this, but some people are driving under the influence, whereas software is not going to suffer from that kind of inhibition. And so we're seeing early evidence that FSD mode is actually safer than humans driving the car. The main story, however, heading into Tesla's conference call was about customer demand, right? For several quarters and for several years, Elon Musk has been repeating that customer demand for its cars and trucks are so backed up that people are waiting months and up to a year to receive their cars. But with the increase in competition, rising price for cars, and a potential recession upcoming where consumer budgets will be tightened, investors are concerned about where Tesla's demand is heading. And Elon Musk addresses this here, saying, "We've got a lot of questions about demand in recent weeks. I can't emphasize enough We have excellent demand for the fourth quarter, and we expect to sell every car that we make for as far in the future as we can see. Now, you can read this in many ways. Of course, you can read it as saying customer demand is strong and remains strong and their orders are backed up. That's one way to read it. Another way to read it is okay, demand looks good in the fourth quarter, but Elon Musk specifically did not say anything about the next fiscal year. How is demand looking out a few more months down the line? The fourth quarter, most of that demand has already been in the system backlogged and all of that. So could it be the case that upcoming or pre-orders for Tesla's cars in 2023 are slowing? You could read this statement in that way as well. So it depends on which side of the aisle you sit on here. Are you a Tesla bull or are you a Tesla bear? And based on that, you could read this statement in each of those ways. In my opinion, the way the market read this statement was in a pessimistic way, which could explain why the stock price fell after the earnings announcement, because that was the main question mark heading into these earnings release here for Tesla, was how is customer demand looking over the next few quarters now that there's significant competition, now that consumer budgets are getting tightened. So that was interesting to note there. Okay, moving on. Now, earlier I mentioned how Tesla's free cash flow has accelerated to where they're, over annually they're approaching a $10 billion run rate. And so Tesla's getting questions about, well, your stock price is down significantly in 2022 and you're generating good cash flow. You have more than 10 billion on the balance sheet. Why not do a buyback? And Elon Musk said that it's certainly possible for us to do a buyback in the order of 5 billion to 10 billion over the next year or so. That was interesting because Tesla stock is down meaningfully in 2022. Company has good cash flow, and if Tesla was to initiate a stock buyback, that could do wonders to lift the stock price higher, or at least stop the Tesla stock price from falling further. Moving on, Tesla's CEO Elon Musk makes a statement giving in his own opinion, saying that he thinks Tesla's stock price can exceed Apple's stock, well, not stock price, I should say, Tesla's market cap could exceed Apple's market cap. In fact, he says Tesla's market cap could be worth more than Apple and Saudi Aramco combined. And I've noticed this following Elon Musk and Tesla over the years, is Elon Musk likes to make these grand statements, these grand projections for several years out into the future, to make these potentially eye-opening, eyebrow-raising statements that generate a lot of buzz, generate a lot of attention, and in one sense creates a lot of marketing, a lot of publicity around Tesla. I wouldn't read too much into this statement. Moving along to Tesla's CFO, or the master of coin, as it states up here, Zachary Kirkhorn. He also reiterates the profit margin, 17% on the operating profit margin, 27.9% on the automotive gross profit margin. Again, impressive for the company to reach this level from where it started. However, it is now feeling the constraints of growth, specifically on cars in transit. As noted in their press release on October 2nd, they've started to experience limits on outbound logistics capacity, which they didn't anticipate. This issue is particularly present for ships from Shanghai to Europe and local trucking within certain parts of the US and Europe. It's difficult for a company to grow this fast and not hit these kinds of constraints, right? Where the industry and the supporting elements of the industry do not support a company's growth at this scale, right? Their plans are to grow 50% annually for several years into the future. However, the supporting environment that's required for Tesla to grow at 50% annually could start to constrain Tesla's growth, even though the business's execution on its own is sufficient to achieve that kind of scale and customer demand is sufficient. The industry, the supply chain, all of the other components involved may not be at a level that supports Tesla's growth of this scale. And here Elon Musk is responding to a question from analysts and in regard to the 50% annualized growth rate. And he says, to the best of our knowledge, we believe that Tesla will continue to grow deliveries and revenue production at a 50% or greater compound annual growth rate. We might see some fluctuation from time to time, but in general, we believe we can grow 50% compound annual growth rate over the long term, which is an incredible growth rate if you think about it. 50% annual growth rate compound is incredible, and if they are able to achieve that, it will make investors, especially earlier investors, wealthier over time. Here, Elon Musk is responding to a question from an analyst about production for the Cybertruck. And again, now Elon Musk here is apologizing for this truck taking longer than expected. But there are a few things like that got in the way, like insane global supply chain shortages, FedEx, and all of these other excuses. And typically this has been the MO of Elon Musk over the years, is he makes these ambitious claims for production, for new products and all of this, driverless technology by 2020 and this or that. And then when the time comes, and the product is not ready or it's not at the scale that was promised, it's easy to attribute the lack of production or the lack of progress on some other factor. And so investors, when hearing about Elon Musk making these ambitious projections, should take it with a grain of salt, because his previous projections have been late, at least to say. They haven't come at the time that was projected. They've come much later and much more scaled down than was promised. So take these ambitious projections with a grain of salt. The Tesla semi-truck is finally going to make its first production, and they're handing over Tesla semis to Pepsi on December 1. So this is an incredible new product that's launching. Pepsi is the first customer. It's a Class A truck, and they're ramping up production of this. Hopefully in 2023, production will ramp higher, more customers, more output of this new type of vehicle. And early indications, Elon Musk is talking about they're aiming for 50,000 units of Tesla semis in 2024 in North America, and saying obviously we'll expand beyond that. And talking about prices, they're going to be much more expensive than a passenger vehicle. So 50,000 units of these cars, let's estimate at $100,000 per car, is going to generate meaningful revenue for Tesla starting in 2024. So I will end the video with this last segment here, where Elon Musk is talking about electric vehicle market share and talking about how, so I think the public at large realizes that the world is moving towards electric vehicles, and it's foolish to actually buy a new gasoline car at this point, because the residual value of that gasoline car is going to be very low. So, I mean, partly true here, right? If you're buying a gasoline car now that you expect to use for the next 10 years, it's questionable if at what price you're going to be able to sell that car 10 years from now if you want to upgrade or trade it into another car. Or you could just, if you're planning on buying a new car now, and a gasoline car now, you could just use that car until you can't use it anymore, right? You could drive it until it's not drivable anymore. You don't need to resell that car or trade in that car. But still, this is Elon Musk and the marketing genius trying to convince folks here that are considering buying a gas car to not do that and instead opt to buy an electric vehicle instead, because as long as people are buying more electric vehicles, that's good news for electric vehicle manufacturers. Even if you don't choose a Tesla, if you change your decision on buying a gas powered car to an electric powered car, that gives you and that gives Tesla an opportunity to capture you as a customer versus if you're not in the market to buy an electric vehicle at all. So long as you enter into the electric vehicle market, Tesla is happy about that because now they have a chance at least of making a sale to you, even though you might choose to buy from one of its competitors. And yeah, that's where I agree with Elon Musk here. That's where the market is going. Electric vehicles are becoming more and more so in demand. Governments worldwide are incentivizing consumers to buy electric vehicles because of the benefits to society, and also because especially governments of non-oil producing countries would like to reduce their reliance on oil producing countries. And so for that reason, they will continue, in my opinion, incentivizing purchases of electric vehicles and making it less costly for consumers to buy electric vehicles. And of course, if it costs less for consumers, the consideration between electric vehicles and gas powered vehicles is going to be skewed towards electric vehicles as it becomes cheaper. All right, so that's all I've got for this Tesla stock earnings call deep dive. Thank you for watching, and tune in next time for the next installment of another deep dive conference call. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.